Hi, I'm Peter Rose, founder of Longwood Currency Trading. Be careful trading the Forex 1 hour chart. You just have to watch what you're doing. There's a lot of incentive for you to look at that 1 hour chart and to trade that as a kind of an in-between safe alternative to the daily or down where I'm at the 5-minute or the 15-minute. The 1 hour seems to be a nice sweet spot for folks that don't want to consider holding trades long periods, several days or whatever. They want to trade a little bit more frequently. 1 hour is a pretty good time frame for that. But you have to be very, very, very careful. I'm recording this in early February of 2024, and I'd like to put up a chart right now that I used in my last video. You can't always get what you want in trading Forex. We want to look at this as it's a 1 hour chart, pound dollar. The example that I was talking about in that last video was surrounding that last red candle at the hard right edge. And if you look at the tails on that thing, the full span of price action was 48 pips. And so the distance between each one of those horizontal bars is about 10 pips. Again, we're on the 1 hour chart. If you moved your hard right edge way over to the left and you started throwing your fibs and all the other stuff, the Bollinger Bands and all that other stuff that folks are telling you that you need to use, and you march that across and you try to trade that based on that, what do you think is going to happen? It's very likely that you're going to get chopped up. Look at the volatility in some of those spikes. Now, I traded during that period. In fact, the bar at the far right that I was talking about, that red candle, that's a non-farm payroll event. And I traded that, and I made, I don't know, $6,200 or something like that. The spread of those candles covers about 3 days or so, and I've made, during that period, I made about 12% against my risk that I was taking in 3 days, 4 days maybe. So I wasn't doing that on the 1 hour chart. I was doing that on a different chart, a lower time frame chart, because you have more sense of where the order flow is going and what they're doing right then than you do at the 1 hour. If you were to take that period, again, this is pound dollar, hard right edge candle is a January 30th candle. So if you look and expand that down like at a 5-minute time frame, you're going to see an awful lot of waves and activity, and you're going to say, why would I want to put up with all that when I have this relatively clear projection of what's going on at the 1 hour time frame? And I would suggest that you look at this 1 hour time frame where, for example, that red line is a 21 period moving average. What is that telling you? That's not telling you much. It's almost flat line. The dark line's a 200 period, and that's a flat line. How are you using levels and stuff based on that volatility on that 1 hour chart? So go down and look at the time frame that I'm talking about and see what I mean about the difference in the moving average lines, for example, at the 5 hour level, or even the 5-minute level, or even at the 15-minute level. So all I wanted to do in this video was to caution you about what you're hearing out there and put that into perspective of where you are in your particular trading journey. If you're a low to mid 5-figure account trader trading 3 to 5 full lots, so that you have that capability, you're in that realm of folks that I think best benefits from my actions. I don't train beginners. I can't talk with beginners because they want to argue with me and they know all this stuff and Bollinger Band's the way to go, and they don't have enough experience really to understand some of the nuances that I try to discuss in not only my courses and consulting, but also just on this channel, to try to help those of you that have the money to be able to replace your light bill, your electric bill, for example, or you're starting to figure out how you should be wanting to get that picking away at your job income level. Start getting to the point where you have the confidence to trade larger bank sizes so that you can someday retire from your day job and live off the proceeds from your trading activities. Now, if you're interested in hearing how you would make that transition from your trading and going into quitting your day job and then taking up trading as your full-time income, there's a lot of hurdles and there's a lot of concerns about that. I'd be happy to chat with you about that. If you send me an email and you have some questions about that, maybe we can talk about that, or I could do a video on that. I actually did one similar to that a couple of years ago. In any event, be very careful. I mean, I'm just cherry picking a 1 hour chart to have you look at that and kind of speculate. If you were trying to trade that chart, how successful would you be? Now, if you look at the previous price action on that 1 hour chart that would go back a week or 2 weeks or something like that, you'd see a lot of similar type things. Why is that? Well, we're coming down to the end of the year where a lot of the folks are trying to unwind positions and prepare themselves properly for tax orientation and all that other kind of crap. And we had a series of really important economic releases here in the U.S. And because the U.S. is a pair in the 6 major pairs, you got to pay attention to what's going on in the U.S. Economic situation. I think you'd find similar patterns of movement, not patterns, but say the same type of volatility and uncertainty being manifest in the 1 hour chart. And then if you drop down, if you're not familiar with that 5-minute chart, you're going to look at that and you're going to, oh my God, look at all this activity. But look at the ATR at that chart level. Look at where you could set your profit targets and how you can control your risk. I mean, how are you going to control your risk on this 1 hour chart that I just showed you? Where are you going to stop out? How do you project that when you have that kind of volatility on a 1 hour chart? It's going to be very difficult for you to do that. So today's lesson is to take, again, GBP USD, look at the 1 hour chart around the 1st of February and backtrack it a few weeks. Look at that and then drop down onto a 5-minute chart and then you see what you think. I mean, I'm not an advocate for trading on the 1 hour chart or the 4 hour or the daily, particularly the daily. I use them in my analysis, even in my entry analysis. I look at the daily chart. It's called multiple time frame analysis. But as far as actual trading, if I'm going to trade, I'm certainly not going to try to trade on the 1 hour or even the 15-minute because I lack options at those levels. And if you've watched many of my videos, I think you'd understand a little better when I'm talking about those options. How do you use those options in your trading? And so be aware of the dangers that exist that I'm talking about on that 1 hour time frame, and look at the 5-minute, and I'm sure you're going to see a lot of dangers that you would interpret. So what do I mean that I feel safer down on the 5-minute? That's what I'd like to do. That's the exercise I'd like you to do, and then make some comments or whatever as to what you think about that. I know if you're used to long-term trading or you come out of the stock market or whatever and you're talking about carrying trades for days or months or whatever, all this doesn't make any sense. When you trade on a position trading basis, a long-term trading basis, and then you listen to somebody like myself who's trading on a day trade basis or even scalping, it makes no sense. it's the kiss of death and you don't want to hear it. However, if you are comfortable understanding the utility of trading on the lower time frames, then it's very easy to map that up when you start and get ready to pick longer profit targets. If you're picking longer profit targets, you've got to get out of the chatter and get up onto the daily chart or maybe the 4-hour. I've been doing this stuff a long time. I've been looking at the currency markets since 2007, actively trading them since 2012. I've been involved in the financial markets as a study thing, stocks. I was an options trader for 4 years, but I've been looking at that stuff since the mid-1970s. So I'm sort of familiar with this stuff, and I know the difference between what goes on in a long-term trader or investor's mind, and I know what's going on in a short-term scalper or a day trader's mind. I know that the short-term trader can easily map their skills up into the longer-term time frames and be successful. However, if you're a long-term trader and you're going along like that, you just cannot migrate your thought process down into the lower time frames. It's very difficult for you. So if you're just getting involved in Forex for the first time, my advice is it's a different market. It trades differently for a different purpose. And to think that you're going to trade and be safe on the daily chart, I think is a misnomer and a disservice for folks to suggest that you're able to do that. If you're really experienced and you have a large bank and you only trade a small portion of that bank to withstand some of the losses that you're going to have to have in setting longer stops because you're looking for longer profit targets, I think that's very difficult for you to do if you really don't understand trading itself. For somebody to say, oh, I'm going to trade the daily charts, I'm going to set my limit orders and I'm going to walk away for 4 or 5 days, that's a crapshoot if you have under a couple of 3 years of trading and you're not successful building a bank at the lower time frames. At the lower time frames, you get to make a lot of mistakes, right? And you learn from your mistakes, you don't learn anything when you win something. You just pat your back on what a hero you are, right? Jesse Livermore said the only way to gain experience in the market is to invest your cash, track your results, and learn from your mistakes. And when you have learned what doesn't work, what's left? What does work? You don't learn that by trying to learn trading or do your trading on higher time frames. Just some thoughts for you. Be happy to address them if you have any questions. Don't ask me questions in the comments. I can't give you a serious answer in a comment. It's long. But if you want to take the time to send me an email, I'd be happy to correspond with you. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.